Welcome to the channel. This is a brand new channel that I just made that aims to analyze different asset classes such as the S&P, major stocks, cryptocurrencies, to analyze the Elliott Wave counts and provide predictions as to where these markets may head and where they're heading in the near future. And I felt the right place to start would be at the S&P 500. It's very well known. There's a lot of money put into it, and when it comes to an Elliott Wave count, the larger sample of people that are using this asset class, the easier it becomes to provide a proper Elliott Wave analysis on it. To give a little bit of a summary of what Elliott Wave analysis is to people who have never been exposed to it, Elliott Wave analysis stems from analyzing, a good way to put it would be large social structures, I guess is a good way to put it. Taking into account the proportions that people may put in the positive and negative direction and the chains of how those get put together. And what I mean by that is people may want something to go up a lot, right? So they'll pump up the price, but its actual value may be slightly less than that. And so the asset is now overvalued, and now you need to have a correctional period to get you back down to that true value. And by comparing the proportions between those up and down moves and chaining them together, you can come up with an Elliott Wave count, which I've done here, and I'll be breaking down each step of this and making it easier to understand, especially if it's something you haven't been exposed to before. I want to get started with this video by, paying attention to the real life events going on at the moment. There's a lot of financial, political turmoil going on at the moment. And that's another important thing to pay attention to when you're looking at Elliott Wave counts and how that may match into the count you're looking at. Obviously, don't allow news stories and headlines to dictate your counts, but they may feed into the movements that are being made at the moment. And that's definitely something that's important to take into account. So I want to start by just saying what Elliott Wave is, as I kind of did before, but making it a little bit easier for people to understand. Elliott Wave composes multiple moves to create larger moves, and there are smaller versions of those moves within itself to make that original move. That sounds very complicated, but let me draw it out for you. You have impulsive and corrective moves. An impulsive move is a 5-step move with 2 correctional moves and 3 impulsive moves. An impulsive move is a 5-wave move like this, right? And then you'll have a corrective move, which can be in a whole assortment of things, but the most common one is a 3-wave ABC. Now, Elliott Wave is in itself a fractal analysis, meaning that you have a 5-wave move here and you have a 3-wave move here, but these 3 and 5-wave moves actually compose a larger degree move. And in the opposite effect, you could also look within this move here and also find a 5-wave move. So this is just the basics of Elliott Wave. I can make a video going more into detail, but I'm providing this little bit of context so as I go through the count, it's easier to understand what I'm looking at. Another quick beginner aspect is that these moves are going to be within proportions of one another. As in, you have this wave 1 right here. The wave 2 is going to pull back a certain percentage of the wave 1 and is going to have strong price reactions to these different percentages. They're called Fibonacci retracements and extensions, and it's very important for Elliott wave analysis as you're looking for relationships and sizing between all of these moves, and similarly also in the move falling back, as in this would be the next one, and then this could then be the 2, right? You'd expect it potentially to fall right around the 0.618 is a common retracement point. So that's just some general context. Taking a look at the S&P 500 at the moment, what is the outstanding count that really reveals itself to us? I gotta find which one it is here because I added a bunch of lines to the original thing. Here it is. So you have this 5-wave movement that appears to be making itself relevant, where you have a move starting back in 1877, topping out in 1929 at the beginning of the Great Depression. You then have the Great Depression and World War II occurring, creating a contracting wedge movement in an ABCDE pattern, which I'll get into in a little bit. Closing out in 1949. You then have a 5-wave movement beginning itself to expose itself for the wave 3. And at the current moment, we're looking to expect a wave 4, which in its magnitude would be once again another depression. Now, where will we top out? There's no exact number, and it's very difficult for me to predict because when doing Elliott wave analysis, you want to be on log scale, which if you're to look at this y-axis right here of numbers, you can tell it starts at cents and then quickly ramps up to thousands to hundreds of thousands of dollars, and that is because log scale translates instead of it being on this scale, right, where it's simply numerical, it translates it based off percentages for the most part, as in the distance on the y-axis between 1 to 2 is the same exact distance on the y-axis between 100 and 200, right? So you have like 1 right here and you have 2 right here. You have 100 and 200. They're like, it's the same exact distance because it's about percentage shifts, which Elliott wave really works off of. Okay, so to break this down simply, we're going to start by proving what we have so far. We have a 5-wave structure starting back in 1877. You don't have lots of data points, but it's a clear 5-wave structure. Another component of Elliott wave is that you tend to be looking for a extended wave within the 5-wave count. You're not expecting everything to be the same size. It normally tends to be the wave 3 being that sort of extended wave, but in this case we don't get that. It seems as though you get the 5, wave 5 being the extended wave. When it comes to checking the proportions, we could start by checking between the wave 1 and the 2. So you take the high of the wave 1 to the low of the wave 1, and you can see we had some price action around the 0.5 point, and it reached down, it tried to get down to the 0.382. Potentially it did in a low, but we only have single data points. It's not like in the candle format, so we don't have all the possible data that we're really looking for there, but clearly there was definitely price reaction. You have support and resistance around the 0.786. You have support around the 0.5. You have support and resistance around the 0.618. So clearly there's definitely price action playing around that Fibonacci retracement. For determining the proportionality with the wave 3, you take the height of the wave 1 from the low of the wave 2. And you can see the wave 3 was just about the same size. You have the 1 retracement, meaning that the wave 3 was the same exact portion or proportion of wave 1, and we had that wave 3 playing in right around that 1 point, which means that in this case we would be expecting the wave 5 to play out as an extended wave, which we get it playing out right around 1.618 times the size of wave 1, which is exactly what you're expecting to get from that extended wave. Before I get ahead of myself, I also want to check that wave 4. which as you can see came right down to the 0.5 retracement. So everything checks out with that 5-wave count. It makes sense, which then overall makes a larger degree wave 1 into our wave 2. So what did our wave 2 compose of? Well, looking at this, and also, as I mentioned earlier in the video, taking into account the actual political and economic sentiment of the turmoil occurring during this time, you could expect there to be uncertainty in the market. Who's going to win the war? You know, what's going on? You don't expect there to be serious market booms and serious demand placed at a time of serious uncertainty. So during this period of time, you have a contracting wedge pattern playing out. We have an A, B, C, D, E, where all these moves, like this one right here, right? The war is basically ending, and you have what looks like a serious move upwards, but if you pay attention, right, that sort of collapsing in the middle of it aids to the visual of it being a corrective movement similar to this one. It's just on a smaller scale. So that helped me conclude into seeing this as being an A, B, C, D, E, where you can then start measuring your next move from here. But to take it into account more wholly and really provide the proportions for this 1 to 2, we can take it. We could take the height of the 1 and then look at what price reaction we get, and you can see there's a lot of reaction around these retracements. Right, you have reaction here as a both support and resistance, right? Acts as a support, then acts as resistance, support, resistance, right? Acts as support. So you get a lot of price action around these points, just showing that this wave 1 really composes itself as a wave 1 for finding the price action of this wave 2. And now being able to take into account that this has been a 1 and a 2, this is where we can start to get our aim points for where we're expecting this wave 3 to go. As I mentioned earlier, the wave 3 tends to be 1.618 times the wave 1. And when you exceed past that, you tend to also be finding that you could be really getting yourself overinflated in the market. Now, taking back into account the economic and political sentiment that we've had since this wave 2 bottom, we've had a lot of things happen. 1975, getting off the gold standard, transitioning to fiat currency. You have AI getting created. You have corruption in the banks that we use. So you have a lot of things playing into creating this overinflated market. To start more simply, though, just looking at the proportions, right? You take the height of the wave 1 from the low of the wave 2. You can see that this wave 3 is clearly playing around these proportions. It's having strong resistance and support to all of these Fibonacci levels. So this 1 to 2 is very valid. Right, you have the 0809 crash playing around that 1.618, which is the point we were looking for that wave 3. But at the moment, the validity of a wave 3, it can extend past this, but for the most part, you look to have it end along one of these levels after the 1 up to the 2.618, and we're approaching the 2.618. It's possible it doesn't reach it and we fall down from there, but my personal assumption is that we have the possibility of reaching it, or we come just shy of it, and then you start to play back down. So we've really maxed out this wave 3 is what I'm trying to get at. We've played all of these points where you'd expect the wave 3 to end, which is really anything after the 1. I mean, anything after the 0.618 is valid, but you'd expect it to become some sort of wedge pattern. But you have it playing up towards this 2.618. It's really overextended. You're really waiting for it to kind of come back down into this wave 4 and take back some of that overinflated value, when in reality, the market might be actually valued somewhere around here. So how do we go about proving this wave 3 in the degree below? So what we can do is look for the 5-wave count that makes up this wave 3. All right, so we have that movement there, but let's break it down even more simply. All right, so let's close some of this stuff out just to make it easier to see. You have the wave 3 of that orange wave 3 start back in 1949. And you have the wave 1 play out like this. Let me see if I can find the actual. Here it is. This is how I have this wave 1 playing out. Where you have a 1, a 2, followed up by a wave 3, and then a wave 4, and then a wave 5 topping out right around here. So how do we go about looking at the proportions for this? What we can do is we can take the height of the wave 1, just like we did with the other ones, take that retracement, plays down to the 0.786. Now we take the extension, the wave 3 right around the 1.618, which is what you're expecting. The wave 4, the wave 1 extension from the bottom of the wave 4 takes the wave 5 to coming right up to the 0.886, just shy of the 1, but that's totally fine. All right, so you can confirm that this is a 5-wave structure. What we then do is you're looking for that wave 2. Which one's a little bit higher? 94.72. All right, we go from there. And looking at this, you have strong support and then resistance, right? And you have it play down to the 0.786. So you can confirm with this being the low that the wave 2 is completed. What structure did it complete in? It went in an A, B, C, D, E pattern. There we go, right? It came down in an A, B, C, D, and an E. And then after that, we're going to be going on to the wave 3 of this movement. Now, it's a little complicated to break down the actual 5-wave movement here. It could be a whole bunch of things, but what you do know is that we can take the proportions of this wave 1 to 2. And look at where the wave 3 could settle. And look at that. It's textbook. It comes right to the 1.618. So you have a 1, 2, and a 3 with lots of price action around these levels, showing support and resistance. And you finish out that wave 3 right there, followed up with the dot-com bubble and also the housing market crash. And now we're looking for the wave 5. Now, once again, you would expect the wave 1 and the wave 5 to be the same height when you have that extended wave 3. But in this case, it doesn't seem like we had that. Now, my original thought, with full honesty, was that what we were coming into was a 1, 2, 3, 4, 5. And it almost perfectly played out, right? Where you would have had that 1, 2, 3, 4, 5. And looking back at this retracement, you're coming right up at the 1 point, the 1 extension of that wave 1. And that would have closed everything out very perfectly. If you're even to look on higher degrees, if I'm remembering right, you have the 1, 2, and the 3. So you can come back down here, right? You'd get that 1, 2, and you would have expected that 3 to come right, either touch it or come just shy of that 2.414. They were very close to one another. And so you wouldn't have been surprised if something played out right there. Obviously, it didn't. And so what we're looking for at the moment is for it to potentially come up to the 1.272, just as you have the 2.618 kind of in that same range. If it kind of can push somewhere up to there, that also opens up that possibility. But either way, we've satisfied the conditions needed to complete that wave 5. So we proved that that 3 exists. Now let's just take a look at this wave 4, just also confirm it a little bit further. You have the high of the wave 3 down to the low of the wave 2, and you can see the reaction to these Fibonacci levels, 0.886 acting as support, and then you have the 0.786 acting as support. So there's clear reactions to these Fibonacci levels. for that wave 3 playing into the wave 4. So breaking down this wave 5 a little bit, let me go ahead and actually, I'm going to open up all the things we have here, just so you can see, right? You have that ABC pattern making that. And now we're coming into the actual count that I personally think is at play. Now, I don't think we're necessarily done yet. It's possible we are, but the structure that you're making and the proportions are a little bit off for that to be the case, and I'll get into it when we get up to here. But what I currently have at the moment is us making some sort of expanding wedge on multiple time frames to actually complete this move. We start with a little wave 1, followed by an extended wave 3, and falling into what can even be a more extended wave 5. And if you read up and learn about Elliott Wave, you know that when you get into some movements where you're getting towards the end of an impulsive movement or towards the end of some other movement with a large correction coming in, you get over exaggerated completions, meaning you might get this expanding or contracting wedge. Normally a contracting wedge would be for an emerging market. An expanding wedge like this would be for a reverting market. And so if we're to take the proportions, it will start to make a little bit more sense. We have our wave 1 and the wave 2. Let's do that first. Right, wave 1 and the wave 2. I can drop it down to the weekly scale just to make it a little bit easier to see. But you have support and resistance, and it plays into that 0.786. It didn't reach that 0.618, but there is price action around these levels. So then you have the wave 2 at play, high of the wave 1, down to the low of the wave 2, flying into this wave 3. It comes just shy of the 1.272 level, but it did exceed, or excuse me, I got that wrong. It plays up to the 1.618 level with support and resistance around that point, right? You get a hold up, a little bit of a breakthrough, but then it immediately pulls back and it plays around that. And then we begin our ABCDE correction. So we get that 1.618 line coming into play between the proportion of this 1 to the 2, which is here. Actually, that's what I got wrong. A, B, C, right? So then you have the 1 and the 2, and it plays out perfectly to that 1.618. Let me just look at one more thing real quick. I just want to make sure because I obviously looked at the wrong point. Yeah, so it comes back down to the 1.786 to finish. So that looks a little bit better. 1, 2. The 3 plays up to that 1.618 point. And then we're going to go look at how the wave 4 looks compared to the wave 3 in a second. I just want to have that set to go. So we'll take the height of the wave 3. And you look at the wave 4, playing around that 0.786 point with that ABCDE pattern. We have clear support, and then a little bit of resistance and support right there. So clearly that proportion is valid. So you've made that 1, 2, 3, 4, and then you're looking for that 5. Now currently, with it being this sort of expanding wedge, you'd expect the 5 to be bigger than the 3. Now we know the 3 came up to the 1.618, so it's not surprising that this wave 5 is expanding past that. And under the count that I've currently drawn for it, let me try to get some of this noise out of the way. We have the wave 4 we were talking about before right here that had that A, B, C, D, E. And now this is the structure we're kind of looking at here, where you have this one large impulsive movement, clearly being a wave 1. And then we have this corrective movement down, making a wave 2. And if we take the portion of it, just to show its validity, you can see it comes right back down to the 0.618 with large price action hanging around these other Fibonacci retracements. And then you've started to make a 1, 2, 3, 4, and a 5, completing this wave 3. So you're expecting to start making a wave 4 on this purple degree right here before we finish in our final move up, in my opinion, on a wave 5. Now it's possible that we already made our 5-wave movement. I can't really draw it out on the subdegrees, which is why I like it more like this, where it's clearly impulsive, corrective, impulsive, corrective, impulsive, completing a 3 instead of it being a 1, 2, and then a 3, 4, which then breaks the wave 1 high and then a 5. But that's a possibility. And to draw that out, it would look something like this, right? So imagine that purple degree. This is another possibility, but you'd have it on that purple degree. You'd have it be a 1, 2, 3, 4, 5, and then you make it purple, right? So instead of 1, 2, 3, 4, 5, you have that 1, 2, 3, 4, 5. You tend to not want the low of the 4 to break the 1, which it might have in this case. It might be just before it. Even then, that's not like a very strong structure. But it is possible that that's what's at play. In that case, we're already entering the bear market. I could take the proportions of this real quick just to see, right? You already have that 1 and the 2 that we checked out. The wave 3 would be a very awkward height, just above the 0.618, not reaching the 0.786. You'd have the wave 4 being right there, and the wave 5 not even reaching half the height of the wave 1, which is fine, I guess, for a contracting wedge. It just doesn't look as natural, and if you're to even take a look at how this wedge would have played out, it also just looks weird in general, right? If you're to take like a ray and play it to like, you know, the top of the wave 3, which is right here, and then you take it to the wave 2 to the wave 4, like something like that, right? 1, 2, 3, 4, 5. Obviously, you're going to get some support here from this high to high. But the fact that the 5 doesn't even really play in there as well, it kind of, the shape looks a little bit weird. But it could be a 5-wave movement. I mean, there's some other things that are weird about it. You have a kind of sharp movement with another sharp correction. There's just a lot of things that don't look too good about it. So that's why, in my preference, what I'd say is more likely the possibility is this one, where instead we're making a 1, 2, 3, 4, 5. It's a lot cleaner of a structure there. It just seems like this move matches with this move rather than, you know, this move matching with that move. So let's take the proportions for that green 1, 2, 3, 4, 5. Let's do that, right? So we have this right here. You take the height of the wave 1 to the wave 2, 0.618 retracement, looks good. Lots of price action around there. The 3 is extended past the wave 1 height, right? This is how high the wave 1 went. The wave 3 went to the 1.414, just shy of the 1.618, but clear price action, which looks totally good. I'll take a look at the wave 3 to wave 4. But the wave 5 is also a little extended. But if we're topping out right now, it's one retracement or one extension past the height of the wave 1, which also looks great. Now just taking a look at the wave 3. Wave 4 had price action around these price points. I'd have to drop down onto the day scale to see a little bit better. But you can see you have price action, support, and resistance holding around these points. So I personally think that structure looks a lot better. Bring it back up to the weekly scale. In my personal opinion, you're closing out of the wave 3. You're having this sort of expanding wedge at play. Let's go back on the monthly scale just so the points look a little bit cleaner. Right, you have that 1 to the 2. You're finishing out the 3 shallow of the 1 point, which means you could expect the 5 maybe to be 0.786 or 0.618 times that height. So we kind of shrink our heights down as we go up, right? Biggest movement, down, smaller movement, down, smaller movement, and then we go down from there. That's personally what I'm seeing. So in the short term, I'll provide what would be under this count the proper buy levels. So we made this 1, 2, 3, 4, 5, which is making this wave 3. To find what you're looking for in the wave 4, you take the high of the wave 3 from the low of the wave 2, and you're looking for it to play into points normally higher than the 1, but because it's a wedge from what it seems to be forming, it's all right to break the 1 as long as it stays above the wave 2. So really any of these 7 points is what you're expecting price to come back to and play off of, just in the short term, right? I'm not really expecting it to come all the way down to here, but I wouldn't be surprised if we make a 1, 2, 3, a little bit more drawn out sideways of a 4, maybe playing around the 0.786 or the 0.618, and then we bounce up in a 5. And just to kind of show you can guess where that might go, right? You're expecting the 5 to be 0.618. Maybe we reach around $8,000, something like that, up there to kind of complete that wave 5, right? So we come down maybe somewhere around here, which is the 0.618, and then you play back up into an even smaller portion. We had the wave 3 being 0.886 times the wave 1. Maybe the wave 5 is 0.786 or 0.618 times the wave 1, and you get something up in this price range. And that would work really nicely as well, because as we were mentioning earlier, you have the 2.618. If you were to take this height again from the low of the wave 2, 8,424, and then you have 8,700. Maybe if you're to drag this down just a little bit more, right? Like around the same height. I know this is a lot of colors and lines, but so it could play right around there. It's definitely possible. So that's the overall count and the proof for my Elliott Wave count. And that's just the count. Now the question becomes, what are you looking for in the downturn? Well, the S&P 500 is such a backed market, and this is such a basic textbook structure, that what you could be expecting is with this, where is it? 5-wave movement right here. You're expecting that wave 4 really to retrace no more than half of this movement. So if I'm to zoom all the way in, take the high that we currently have, take it from the low of the wave 2. You can see, right, we have a lot of price action around these points. It's possible we break higher to where the 0.618 actually comes into contact with the low of 2009 and the low of 1974. To really match this up nicely, right? So like maybe we break just like a little bit higher like that, and that's where we end up holding up, which is right at that 8,400 point. But if this were to be the high at the moment, which once again I don't really think it is, but if it were, you're expecting it to be really one of, I can show you actually, right? You get rid of one of, you get rid of that, this, and you really expect it to push down to one of these 4 points and get some movement off of that. At minimum, $3,400, maximum $308, which would be pretty catastrophic. But once again, like pushing it up, right? If it were really to play around that $8,400 mark that we were looking at a second ago, where you get good lineups with a lot of stuff, something like this, where, in my personal opinion, with full honesty, um, going off the basics of Elliott Wave, where, right, you have the wave 1, the wave 3 is 1.618 times normally the height of the wave 1. Obviously, in this case, you have it being more like 2.618. But what you tend to have happen is the wave 4 of this larger degree, this purple wave 4. Where is that? 1, 2, 3, 4, 5. Tends, this wave 4 tends to want to pull back down most normally around the wave 4 of the degree below, right? So you have this 5-wave movement of the degree below this orange movement, and you tend to have the wave 4 of this bigger orange movement want to pull back around the wave 4 of this red movement because it's a degree below. And it's very catastrophic for the market. It would absolutely be a depression, but that would be my expectation. Like, most commonly, that would be what I'm expecting, which is a huge movement. It's possible it doesn't. It could come to the high. I had the retracement up there a second ago, but I must have gotten rid of it. I mean, I could just take I'm not going to get it down perfectly, but right, like something like that. Like, it could come somewhere around the 0.786. It could just come down to here, but the textbook answer would be around the wave 4, the degree below, which the reason why I would lean towards that is because the S&P is such a big, it has so much velocity and volume of money behind it. You would expect some sort of very simple structure to fall behind it, just as it does appear to be a very simple textbook structure on the large scale. Clear 5-wave movements, clear 5-wave movements, clear corrective patterns going through it that are very proportional because of how huge these time frames are and how much money is put behind it over these periods of time, that it's very hard to manipulate that massively to appear as though it's a different structure. So that's my expectation, pulling back somewhere around here, getting some sort of large A, B, C movement. Pulling back somewhere around this low down here is what I wouldn't be surprised in. Because once again, you have a shallow move, which is where you get that elongated sideways corrective movement. And then the sharp movement is this quicker corrective downward movement right there. So that's what I would expect from this shape it's been making. But that's generally the gist of what I'm looking at. Let me know if you guys have any questions. I can make a video in the future going over more in-depth Elliott Wave analysis. I tend to keep it pretty simple with how I do Elliott Wave analysis. Let me know if there's any other assets you guys would like me to look at. I'll probably be making a video going over Bitcoin in the short term, as it's been dropping quite a bit, so it's definitely a good time to look into making your Elliott Wave count for it to try to find some proper buy levels to get yourself bought in properly. But I really appreciate you guys taking the time to give this a look. Let me know if you guys have any questions, whatever else you guys would like me to do, and I'll be sure to answer them in the comments. Good luck with your trades. Keep your money secure and safe. Do not take my information as trading advice. I'm just providing some thoughts as to what I'm seeing. And be sure to provide your thoughts as well in the comments, as I'll definitely be reading them. Thank you guys. You take care.